Aditya Birla Group presents Budget 2015, the Make in India Budget, co-presented by SBI. Indianomics Budget Special.
Hello and welcome to this special budget edition of Indianomics. From the start, economists were watching this budget on two pillars. Is it able to bring down the fiscal deficit? And on the other hand, is it able to spur investment at the same time? Especially investment in infrastructure. Now, in this edition, we are going to discuss exactly those two factors. Has industrial growth or at least infrastructure got any pump priming from this budget? We've got two experts from industry to discuss that with us, and thereafter we will be joined by two economists who will be discussing what they have read from the pushing behind of the fiscal deficit targets and timetable by the budget. But first, it's the growth imperative that I want to address, and let me invite Rajiv Lal, the Executive Chairman of IDFC, and Mr. Seshagiri Rao, the Joint Managing Director and Group CFO of JSW Steel. Gentlemen, welcome. Well, let me start with you, Mr. Rao. If I looked at the numbers, what has investment got from the government? Deficit has not got what we were expecting, but the plan expense actually is the same as what it was last year, or rather this year. 4.65 lakh crore was what the actual number was for FY15. 1 lakh crore less than the budgeted, which was 5.75, but next year is also 4.65. So how are we better off in terms of investment?
No, everybody expected in the beginning that it will be a pro-growth and also with fiscal prudence. That is what everybody expected in this budget. I think fiscal prudence more focus has been given in this budget. That is why even though it is not 3.6%, he was able to contain it at 3.9%, which is an appreciable measure. At the same time, the entire industry and the entire country is expecting that they will pump prime the economy and government start spending on the overall economy, thereby the investment cycle will come back. But what we are seeing in the budget, even though there is almost close to 2 lakh crores of incremental revenues, out of those 2 lakh incremental revenues, 1,75,000 crores have been transferred to the states by way of devolution of the revenues. So the net amount that is available with the government, most of it is spent on the revenue expenditure. So that is why we are not seeing a big increase in the overall plan expenditure.
So short point, investment has not been pump primed.
I am not seeing a big additional amount that is coming into the economy in this budget if you look at all the allocations. But if you see the total amount available to the states, whatever is transferred, plus the grants together, there is a 1 lakh crore additional amount which would be available with the states that could be spent on various central plans and also with the state plans.
So now we study state budgets hereafter to check whether they are able to pump prime. But Mr. Rajiv, I'll come in on that. We are not able to see any money that has been given to the plan kitty itself. But is there anything else in the budget that is going to give industry a little more space to invest? I don't see that either.
So Lata, you are seeing this all wrong. There is a huge investment stimulus that is going to come from this budget. I don't know why people are not clear about that. He has in his speech said there's a 70,000 crore increase in total development spending, capital spending, right? First of all, it's not useful to look at the budget in terms of plan and non-plan. You know, half or more of the plan expenditure is basically nothing but revenue expenditure. It's much more interesting to look at the budget from the point of view of revenue spending and receipts and capital spending and non-tax receipts. Okay? Yeah. So if you look at it from that point of view, on the capital budget, he is spending an additional 70,000 crores, which is essentially gone to infrastructure. And that is budgetary expenditure on infrastructure, which is funded partly through non-tax revenues, including disinvestment and so on and so forth, right?
Yeah, actually...
Now, that 70,000... Hang on, let me finish.
Yeah.
Part of that 70,000 is actually then channeled into extra budgetary structures. Yes. He announced this National Infrastructure Fund, 20,000 crores has gone into the National Infrastructure Fund. There are some other amounts that have been allocated to balance sheets that sit outside the government budget. Now, those balance sheets and the fund can themselves now be levered up several times. So my back of the envelope calculation is that this 70,000 crores of incremental capital spending actually could translate into upwards of 3 lakh crores of additional spending on infrastructure across the country.
Okay.
I haven't even talked about the 1 lakh crore that has already been announced by Mr. Prabhu in the rail budget yesterday. Okay, that would also be levered up a few times. So, net, as a result of the rail budget in today's budget, I'm seeing an increased spending on infrastructure catalyzed by the budget to the tune of 3 to 3.5 lakh crores. That's more than 2% of GDP.
When it gets levered up, we will see, Mr. Lal. I mean, at the moment, I'm not sure. This is just the seed capital that has been given for the infra fund, and we will have to see how it is getting levered up. We are also confusing, I think, infrastructure financing with, infrastructure building. Actually, what has been given for infrastructure building? 14,000 crore has been given for roads and 10,000 crore has been given for railways. That is, the concrete money that has been given. But when it gets levered up, and it will pick projects in the SPVs, that's a long way off, isn't it? And we don't know whether those structures will be bought into.
How long does it... Baba, how long does it take to lever up a fund, for God's sake? I mean, it's like saying that, a balance sheet like IDFC cannot raise 30,000 crores of debt in the next 3 months. Of course we can.
Right.
So, it's an issue. Infrastructure financing and infrastructure spending is the same thing. The government is not going to do all this spending.
Mr. Rao, do you buy that?
No, only one issue which I am seeing is that even railway budget is talking about total 8,56,000 crore spending over a period of 5 years, out of which 1 lakh crore is to be spent in the next financial year. Out of that 1 lakh crore, again a huge amount is to be levered in the market. So if every governmental undertaking or a PSU comes to the market and wants to lever, that is also one issue which we need to see the total amount, how they will be able to raise that type of money.
Okay.
And the major problem which we are seeing in the infrastructure sector is not that government continue to raise money to build the infrastructure. The PPP model, which is also touched in the budget, the issues which are there, the risks which are not shared properly today, how do we correct that PPP model? I think that is what is to be addressed in order to pump the economy.
But he did say that he is going to in future, accept more risk for the government and less for the private sector. That was mentioned in the budget. Mr. Lal, would you worry that if everybody came to raise money, it would be a problem raising money?
Of course not. Today, what is the problem in the financial sector? There is no credit demand. Credit growth has slowed down dramatically. You want to kickstart the investment cycle, somebody needs to borrow. The private sector is not able to borrow. It doesn't have the appetite, nor does it have the balance sheet strength to do so. Right? So if you ask a public sector bank or any financial institution and some railway finance company, IRFC or PSU wants to raise money, you don't think the banks will lend to them? Of course they will.
Okay.
Then on the PPP, so let's be clear, the government is not going to rely on the private sector to invest and kickstart this infrastructure investment cycle. It is going to rely much more on PSUs to do that. So NTPC, BHEL, IRFC, RITES, IRCON, these are the entities that are going to carry the burden of this investment.
Okay. Well, I'm less confident about the PSUs. They have been sitting on a lot of cash and they have not rendered a great account for themselves, but probably better execution. After all, we did see Coal India's output, which was languishing at 4% for the better part of the last 10 years, has managed to do 7.5% this year. So maybe better execution will help. I do not know, but the jury is still out on that. Last few minutes to both of you. Mr. Rao, do you think there is some light at the end of the tunnel for growth? In what quarter do you see? How do you see FY16 for growth itself, for infrastructure?
No, what we are expecting in the next financial year, majorly the demand, which is today is very, very subdued, that will be revived in the next financial year, at least in the second half of next financial year. As we are expecting that whatever funds that are being made available in the budget or through public sector undertakings, if they can lever and start spending money, I think we can see some revival in the demand in the next second half of the next financial year. Hopefully that should bring back the growth. Okay. I think that is what the government is expecting, total nominal growth of 11.5% and the GDP growth of 8 to 8.5%. So based on that, we are also hopeful that growth will be revived in the next year. And in the following year, the private sector will come in to participate in this growth.
Okay. Your thoughts on that, Mr. Lal? I think you are way more emphatic that growth will pick up.
No, I am indeed more emphatic, and I don't share your skepticism about government's ability to spend the money using off-balance sheet mechanisms. So I think you and I have to have a quieter chat about that.
All right.
And I need to convince you how the investment cycle can be kickstarted by PSUs leading the way using off-balance sheet financing.
No, I am very skeptical, but I am willing to be convinced that things will work.
Okay.
When the first tranche of the seed capital is able to raise money and invest it very quickly, I'll definitely come and tell you that I've changed my thoughts. Mr. Lal, Mr. Rao, thank you very much for joining me in this discussion, and let's hope that Mr. Lal is right and I am wrong. We'll have to take a break on that note. Thereafter, I'll be joined by two economists who will examine whether the government's decision to push back the deficit was a wise one and how the markets will receive it.
Aditya Birla Group presents Budget 2015, the Make in India Budget, co-presented by SBI. Indianomics Budget Special.